Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Welcome everybody. Let's take a look at the S&P 500. We're looking at the E-mini index futures /ES March 2022 contracts. And we're looking at the daily chart. Now, the last few days I've been talking about January 13th would be probably a cycle low somewhere around here. Could come a little early. Today is Friday the 7th. Okay, so I don't know if the 13th falls on a weekend or not. Doesn't really matter. The point is, approximately somewhere around this date, I would expect a cycle low. Okay, the next one's out here about February 2nd through maybe February 8th. Okay, so be aware of that. But prices are coming down. And I said, are they going to, the last few days I've been talking about how they might track along to 50 or even come below it. Right now, just based on looking at here, guys, I think there's a decent chance that the S&P 500 is going to break below this 50. Which, it's not exactly flat. It's still going up a little bit, but not by much. So that's the reason I say that is because 4670, okay, we finished below that today at 46.67. Okay. And the low was actually 46.53, so it got below it pretty good. But today finished below the 50-day moving average. So that's not a big deal yet, but it may or may not become one. But it definitely finished below it by, 2.5 points. And I think if I had to flip a coin on this, guys, I really think there's going to be more decline below the 50-day moving average. Okay. Again, be aware as we move closer to the middle of the month, I think there's a greater chance of price decline. Now, the short-term indicators, they kind of look like you could get a bounce. I mean, it's possible. It's possible you get a bounce here and get some green days off of this for sure. But whether or not they sustain it all the way through the middle of the month and also going towards the beginning of February, I'm thinking at some point this thing's going to get below the 50. Somewhere between the middle of January and like the first week or two of February, that this is going to get below the 50. We'll have to see how it plays out. But right now, I think there's weakness. That's what it looks like to me. Okay. Let's continue to look and move over to the monthly. Not much has changed, except as I've been talking about, there's definitely diversions here. Actually, diversions for quite a while going on. Really, I mean, if you look at this, the more I look at this, if you look at this divergence, guys, it's really been from here. Look at how these peaks have been lower and lower and lower. Okay, so it's kind of an arc, right? It's been getting lower, right? So that divergence, if you really think about it, on the monthly scale has been happening really since about December of 2020. Okay, so this whole time prices are going up, but divergence continues to get stronger and stronger, the divergence. And then as I mentioned before, right back here in August, the stochastic momentum index joined in on the fund, and now it's also diverging. Okay, so again, why is that a big deal? Because we have a huge amplitude difference between the bottom of the January candlestick and this 50-month moving average. Okay, so I've been saying it. We're going to get 1,000 point or more decline. Yes, it's going to happen. Right now we're 1,500 points away from the 50-month. Okay, we're going to get more than 1,000 point decline, guys and gals. Just accept it. It will happen. Whether it happens in 2022, okay, I don't know. But it's coming. You can bank on it that the S&P 500 will lose more than 1,000 points. Okay, I'm not saying it's going to lose more than 1,000 points from where it's at right now at this moment, because we could go to all-time new highs. But basically, what the point I'm really trying to make here is these two lines, this yellow one I'm drawing here, and kind of this one here. Okay, they continue to widen, right? The angle between these two continues to widen, right? This angle's, the distance between the lines is getting greater. Okay, it's not getting smaller, right? It's getting greater. You see how this angle over here got smaller? From here down to there, got smaller, right? Went from significant distance to medium, and then small, then really small, right? You follow me? So, if anything, this gap, this amplitude between the 50-month moving average and bottom of the monthly candlestick just keeps getting greater. So that means the 1,000-point drop actually could be significantly more. Right now, it's let's see, 33.43. It's 1,300. Sorry, I said 1,500 before. It's like 1,300. Okay. It was 1,500 just a little while ago because we were at 48.08 on the all-time high. So that's coming. More than 1,000-point drop is coming. Okay, let's look at the weekly. Let me go back to the monthly because one thing I didn't cover was the cycle. So that cycle low there, I think, is June. Yeah, so just be aware you got a cycle low out there in June 30th of 2022, which gives, some credence to the possibility that prices could decline going into the middle of summer, right? Kind of the beginning to middle of summertime, somewhere in that area. Okay, really anywhere from like May all the way out to September, right? Because this is a huge time frame. So expect prices, I think, to decline from late spring to early autumn of 2022. Okay, so let's now go over to weekly. Let me switch the drawing set over to the weekly chart. And the one, I don't really glean too much from the weekly chart because there's just, it's kind of always the same. Weekly charts to me aren't very powerful chart to look at, but for cycle analysis, it's helpful. And as I already mentioned, January 16th on the weekly and January 13th on the daily are really very much in synchronicity with one another. Okay, that's January 16th on the weekly chart and January 13th on the daily chart. So I'm inclined to think there's going to be, a significant enough to price decline going into the middle of January. So I just think that gives credence to that. Okay, premium members, we're going to go through all of the futures products. So first we'll start with the hourly chart here for the S&P 500. Okay, let me switch over to the hourly drawing set. Babamski. Wow. The S&P 500 did come up basically to the bottom side of this 50-hour moving average, but it didn't get above it, and it's tracking along it. Okay, so to me, y'all, a lot of you that have been subscribers, premium members for a while, you know what I'm going to say. Trade short. Trade short below the 50. Okay, that's what I would do, especially now that the daily is a little bit below the 50. Trade the hourly chart below, to the short side. Don't trade it long. Okay, if the daily goes back above the 50, okay, fine. But for now, the daily is below the 50. We trade the hourly, and even the 5-minute and the shorter time frames. We're going to trade them short. Okay, so there was some decent opportunities in here. All right, remember this hourly cycle, I think, is January 10th, about 11 a.m. Central Standard Time here in the great state of Texas in the USA. Okay, so be aware of that. There's still a cycle low projected to come somewhere around there. Okay. Obviously, since we broke below basically right around this area, the S&P 500 has been weak, staying below the 50-hour. Until that changes, it's still weak. Considering the middle of January, I think we're going to get price declines. Okay, I'm not surprised. Let's look at the 5-minute chart. Okay, what kind of trading was going on here today? Trading. I've been crazy busy, guys and gals. I'm actually doing software development again. So between that and keeping track of all the market, oh my gosh, been crazy busy. Yeah, and I have a small business. I do some other things there too. So life is a bit hectic. But looking at the 5-minute chart here, oh my goodness, man, how do you not trade that? Monstersville. Okay, how do you not trade that? That's so huge. I mean, you know, I mean, as soon as I get this red candlestick right here, I'm trading it. I'm just shorting it. This one I'm shorting. This one I'm shorting. Okay, this whole thing I'm shorting it. And for you new members and those that you maybe not know this, you know, don't worry about if you give a little bit back. Don't sweat it. Just trade this whole trend. When you get to this candlestick right here, there's no reason not to trade this short and just stay in it. Okay? Just stay in it. Okay? If you want to get out on that green candlestick when it got up there on that upper wick, fine. Just get out and then back on this candlestick right here, you're back in. Okay? Now this is going to be some intraday trading. Not everybody's going to do intraday trading. That's understandable. But for those that do, that's how I would trade it. Okay? These big, long upper wicks, yeah, you're going to want to get out of those. And then you're back into the ones where the price is just going down, right? Most likely, without looking at the 1 minute chart, this whole candlestick was mostly just down the whole time for the whole 5 minutes. Okay, just working its way down. Okay? If you give a little back coming up to here, don't worry about it. You made plenty of profit. Trading's not about perfectly entering and exiting. Okay, get that out of your mind. You just want to be fairly accurate on your entries and exits. Okay, if you give a little back, it's not a big deal. Move on to the next trade. So that's what I would have done. I would have traded here. I might have done some stop losses, or just stop outs on a few of these these candlesticks that have some upper wicks. The rest is just all money. It's all profitability. Okay. All right, let's move on to the crude oil, which I'm just going to eyeball this for now. I'll set up the cycles later because I haven't looked at this in a while. Wow. Crude oil back up to $79. Monster mash. I'm actually doing some software contracting for a oil transport company. They do all the pipelines. Obviously, I'm here in Texas. So, yeah, crude oil definitely has my attention. At $79, absolutely amazing. This thing has just rebounded strongly. Still looks pretty strong. There are some divergence warnings starting to show up here, so, you know, something to have to pay attention to. Let's see, what kind of cycles we got here. Let me just look at these cycles real quick. I'm not going to spend a lot of time on the cycles. I'll do it in off video. But just really quick here, if I had to say January 16th, guys, there you go again, that January 16th. Same thing we saw in the weekly and approximately the same thing we saw in the daily for the S&P 500. So be aware that January 16th for crude oil, okay, you could get a price decline. Maybe we're already seeing it right there. Okay, so be aware, yes, it's above the 50. Okay, price is above 50. But be aware that January 16th, you know, could see crude oil pull back, could stall. So look for that going into next week, middle of January. Crude oil could pull back a little bit. How much? We'll wait and see. Okay, that's my take on crude oil. I'm not going to start slamming through the monthly and the weekly right now. We're just going to look at the daily. If I see something super significant, then I'll look at the other time frames. But for right now, I think crude oil overall. Okay, let me look at the weekly. Yeah, strong. Just looking at the daily and the weekly on the crude oil. Crude oil looks strong to me. Yeah, there might be a pullback coming in the middle of January, but I don't think it's going to be a huge pullback. We'll have to wait and see how that goes. But right now, crude oil continues to look strong. Both the weekly and the daily look pretty strong. Yes, we've got some divergence warnings going on here. So, like I said, middle of January, be aware of that. I think after that, we'll reevaluate, but I have a feeling it's going to be strong after the middle of January. Okay. All right, let's take a look at gold. $17.96. Wow. I remember talking about gold looking weak, but it made a nice rebound, and now below the 50. A little bit of crash and bang and boom going on here, huh? Okay. Short term, daily chart, I'd be cautious about gold. I wouldn't trade it long right now. This doesn't look like this is bottomed yet. The Big Daddy's trying to say you're going up, but it hasn't happened yet. And the MACD, we'll see if that crosses over. So for right now, I'd be cautious about gold. It's below the 50. Okay, so let's look at the weekly. All right, so you know what? Let me look at these cycles. Hold on one second. Let me just eyeball these cycles here for a second. Okay, there's like some overlapping cycles going on here, which is fine. One of them may be hourly. I'm just looking. Let me just look at these green cycles. Green, boom, boom. Yeah, pretty good there. Pretty good there. Okay, so I think the cycles still look pretty good here. January 26th for gold, guys. Is the next cycle low. January 26th, right there. I think those yellow cycles are just daily. When I get a chance, I'll get it out of there and move it over to a different drawing set. Okay, but this is January 26th. I think some caution needs to be taken as gold moves towards January 26th. Okay, I think there's a cycle low coming up on gold. All right, we just look at the weekly just for a moment here. Wow, that right there looks, yeah, a down week, and even the weekly is just below the 50 week. So be cautious with gold, guys, at least for the short term. Okay, let's go look at natural gas. Let me switch over to the daily. My goodness. Natural gas continues to get the beat down, but it has strengthened here this week. Looks like we got some. I'll tell you what we got going on here, guys. Now that I'm looking at this. See this little, then bump, then boom, then bump, then same thing, boom, little zigzag. Don't really want to call it a stair step, but almost is. Okay. Just tracking sideways in a zigzag pattern, right? A little bit of what we would call a range bound, right? So if I just had to eyeball this, between $4.16 and about $3.60 is range bound. Okay. So let's take a look at this daily cycle. Let me just see if it's still valid. Looks pretty good going back. So if I had to take a look at this cycle, January 17th. See how all these futures and commodities are all coming to the middle of January. So again, even natural gas, I think it's going to come up. I think it's going to drop into that middle of January timeframe. Okay. All right, let's move on to wheat. What is this one? January 19th. Okay. Well, wheat is just, I mean, look at this, man. I haven't traded much lately at the end of the year, but look at this. I talked about this, that wheat was going to make the monster move. And sure enough, look at this. It's over 100-point move. A lot of money being made in wheat, and I'm sure oats is going to show something similar probably. Okay. There's still weakness here, though. The Big Daddy says we're going to go up well underneath the 50-day moving average. Okay. Be aware that wheat has a cycle low coming up January 19th. It could be 13 through the 19, okay? But guess what? They're all showing it. Middle of January, maybe the third week of January, everything is showing weakness going into that time frame, okay? MACD still pointing down, so be really careful about that. Okay, this one's January 19th on wheat. So I wouldn't trade it long, but I would take advantage of even on the hourly, possibly, because wheat's very tradable on the hourly even. It's not going to be something like the S&P 500, but, be aware of that. But still, and there's the XW. You could trade the XW instead of ZW for smaller contracts, okay? So just be aware of that. I'd trade the short side. Anything that's giving you opportunity to short side. Okay, let's look at oats. Okay. OD oats. Wow. 668, more than 100-point drop. Right? A lot of money made here. Nice. I'm not going to talk about these cycles. These cycles just aren't. I mean, you can kind of, cycles are just ridiculous. Oats is not really cyclical. Okay? But for now, oats still continues to look weak. Look at this. Still looking weak. Still looks weak. What's the monthly showing? Look at that. And this ain't over. It ain't over. Now that we're in January, we didn't get a bounce. Will we get a bounce going into February, March? I don't know. This does not look over to me. And I think forget these cycles here. Those are daily only. I think oats is not done. And even if it does bounce, it ain't done. And this is going to come down, I think, somewhere back all the way down to the 400-point range. Okay. Of course, it's contracts. You got to time it for the right month, and it isn't like you can just short a stock and go on forever or some type of ETF. So you got to time your entry, of course. Okay. So that's my take on wheat. I mean, on oats, I think it's got a lot more to go down. Doesn't mean there won't be some daily bounces, but oats I think is in, I don't want to say big trouble, just a lot of opportunity to the downside. Okay, I'm going to go right into the live cattle. Okay. Staying above the 50 on the daily chart. Down, boom, boom, boom. Looks like it might bounce off the bottom and come back up. We'll see. I talked about this, I think, before the break, that there was going to be price declines in live cattle, and sure enough, it came all the way down and touched the 50. So when's this next cycle low due? February 23rd. So be aware of that for those that are tracking live cattle. February 23rd out here. Looks like a cycle low to me. Okay, 223. Right now, it does look weak. The Big Daddy forecast is trying to say it's going to go up, but it isn't doing that yet. Sitting right on the 50. We'll see if it gets a bounce. Overall, this is looking kind of weak, like it's moving that way. Okay. Let me look at the feeder cattle. Wow. Same thing here. Almost exact same pattern. Boom, boom, boom. And when is this one? Is it the same? Oh, this is January 26th. Be aware of a feeder cattle low, January 26th. Okay. Price declined into that. All right. Right now, feeder cattle looks weak. Yeah, it's looking weak. Again, just like live cattle, may get a bounce, but it hasn't done it yet. Okay, beware of this date. I think there's going to be some price decline. All right. That's it for right now, guys and gals. Hope everybody enjoyed the video. We'll talk to you all real soon again next time.